Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, consider dropping that like and subscribe. It greatly helps the channel, so thank you very much. Now, Fed meeting, cut rates 25 basis points. Everybody was expecting it. However, oh my God, only 2 rate cuts for 2025. Now, this actually presents an opportunity. I've already seen all sorts of people. Oh my God, I sold everything. I sold all my stocks. I sold all my crypto. I sold all my everything, right? So now it's the typical fear craziness that you're going to see on YouTube as well as other places. Because the funny thing is, this presents you with an opportunity, which is you know the truth as the market prices in something else. Because let's go to mathematical facts, meaning not my opinion, not your opinion, not everybody else's opinion, just what it is. At current interest rates, by January 2026, meaning 1 year into Trump's presidency, the interest expense on the national debt would be around 1.7, 1.8 trillion dollars. The entire tax revenue of the US is around $5 trillion. All the taxes, state tax, municipal tax, income tax, corporate tax, blah, 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 blah. Right? So one of two things will happen. Number one, they will cut rates much further, which means that the repricing of the market to 2 rate cuts instead of more than 2 presents an opportunity, or the budget deficits will explode, one or the other. In any case, the end result is more liquidity created, which means asset prices go up. So what's happening right now is basically a sell-off amongst almost all the markets, and we've been discussing this quite often. The TLT, the bond market, is now below 90. As I've mentioned 1,000 times in this channel, if the bond market is shaky, the other markets may go up for a while, but eventually they will come back to the bond market. Now, what's going to trigger is it going to be a Fed announcement? Is it going to be a bad auction of treasury bonds? Is it going to be some sort of event elsewhere on the planet? That part I don't know. What I know is if the bond market shows problems, those problems will be reflected in all the other markets. And we are in an historic year for stocks, for US stocks, coming back from another year, historic year in stocks last year. So, as I've mentioned before, as the currency becomes faker, the corrections become sharper, the moves up also become sharper, so everything becomes more volatile. That's in a sense, that's it. When it comes to crypto, once again, what is Bitcoin doing? Bitcoin, XRP, and Ethereum just retested the 20-day exponential moving average. Where did I hear this before? Oh, that's right, about a week ago. We are retesting important moving averages. But in this cycle, because people remember 2020 and 2021 so vividly, people have so much PTSD that they dump all of their positions and they go completely crazy. As you guys know, I have a prediction for Ethereum, which is Ethereum above $5,000 by the end of the year, at most mid-January. I've been saying this for months now. I think we're still going to have a center rally. I think the market just sharply repriced fewer rate cuts, and it's going to present an opportunity when the market either figures out that more than 2 rate cuts will happen, or liquidity will be created via budget deficits. How am I so sure of this? Because it's a mathematical problem. It's nothing to do with Trump. Has nothing to do with the Democrats, has nothing to do with Elon Musk, has nothing to do with the Congress, with House of Representatives. There's nothing to do with it. The interest expense on the national debt is already the third largest item on the budget. Since it cannot be repaid, and since debt will keep on going up, particularly as the tax cuts will come, you either have fiscal stimulus or monetary stimulus or both. But one of the three will happen, and all scenarios are good. In the short term, yes, you can have sell-offs, and these sell-offs, be aware of this, the sell-offs in the risk markets will become more aggressive with time. Important to note this. Why? Because the currency is becoming faker. That's it. There's no big conspiracy theory, there's no big master manipulators on the background, there's not, no. It's just as the currencies become faker, become more fugazi, as it's said in Italian, the more volatile to the upside and the downside these things become. So we're retesting a few important moving averages. YouTube is all red again. People are calling the end of the crypto bull market. This is it. We're finished. These are the good things that you want to see. The time that I'll be concerned is when everybody's in agreement that a soft landing has been achieved, that there's no recession in the next 5 years, that crypto cycle, no, the crypto cycle is broken. Haven't you heard? The government is in it. So no more crypto cycle. The 4-year cycle, forget about it. Forget about it. That's not going to happen. No crypto 4-year cycle anymore. It's up only forever. So whenever all of these people are in agreement here with these kind of things, then it's the time to be, okay, I'm starting to be very concerned now because I cannot find a bear, even if I try for hours. Everybody keeps telling me how bullish things are. Are we there yet? No. Actually, I agree with Somi on something. I think the first altcoin season bubble will be quite disappointing because people are so obsessed with selling early that we may never go to the 100x in the first bubble, which means we need to let all these people get their 5 and 10x's, get out, and then see another 5x, 10x on top of them a little bit later in the year. Is there a reason for major concern at the moment? To be honest, I don't see it. It's one of the funny things is the market always believes the Fed, despite the Fed never sticking to their words. That's one of the funny things. Oh, it's transitory. What tech bubble? There's no tech bubble. Real estate, 2008. Nah, everything is contained. Everything is good. Pandemic, it's not going to be a problem. No. Everything is good. Over and over and over again, the Fed is always wrong. But for some reason, the market believes it. And that's what's important. You see, what I think and how I see things about the interest rate on the debt, etc., that's my view, which allows me to, as the market prices in the 2 rate cuts instead of, for example, 4 or 5, and because I know that liquidity will be expanded either on the fiscal side with deficits or on the monetary side with interest rate cuts, I can benefit from these sell-off opportunities. But make no mistake about it, the market dictates the price action. It's not me. It's not, oh, I'm so smart, I can see it, but the market can't see it. Oh, this needs to come. No. The market will decide. And in my view, what we've been doing is retesting a few of the important moving averages. The Trump trade was also extended. Once again, we were priced for perfection. We lowered from step 10 to step 8. That's it. We were going up every single day. We are now relaxing, taking some steam off, breathing, panicking so we can get rid of all the weekends. They all can go away. And then they can all go to Harry Dent channels and Peter Schiff. And I mean, gold and silver is doing so poorly. Maybe Peter is a bit more humble, but well, that's a big stretch. But yeah, at the moment, what we've done on the top 3 coins, let's say, so Bitcoin, XRP, and Ethereum, is we retested the 20-day exponential moving average. When was the last time that this happened? Last week. That's it. So as you guys know, I always like these volatile days. I like to see the panic. But it's good because it moves us from extreme greed, etc., to neutral and fear, which is good. That's what you need. We can't be in extreme greed for too long, otherwise the market catches up. Look at the TLT, look at the treasury bonds, not because they are a fabulous asset, but that market, as I've been saying, if that market keeps crawling down, the other markets get subdued. It may take 3, 4, 5, 6 days for that to be visible, but there's no way, and I've said this, I say this in almost every single video. There's no way that the bond market is going down, 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 and the rest of the markets are going up and up and up. And with that, guys, thank you very much for your support. Sorry, I know that today is a bit of a shorter video, but I'm really tired. It's the end of the year. Few things have work. Family starting to come over. Rah, rah, rah. You already know how this is. I get the feeling that in a few days or a week or so, we're gonna be laughing about all the trauma that people had from this Wednesday. And with that, thank you very much for your support, guys. Catch you in the next one. And don't forget, like and subscribe. Thank you.